European Central Bank raising interest rates by 75 basis points. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And this morning, just a quick video because we did have another interest rate increase out of the European Central Bank. Yesterday, we had one from the Canadian Central Bank. So just wanted to dig into this and pass along what is going on. Again, you can see European Central Bank raising interest rates by 75 basis points. This is following a 50 basis point hike at the July meeting that took rates from negative 0.5% to 0. And now the ECB raising interest rates to 0.75%, expects to raise interest rates further because inflation, as most are well aware, remains far too high. ECB's inflation expectation still at 8.1% for 2022, and they're saying 5.5% in 2023, 2.3% in 2024. So they raised interest rates 75 basis points. Euro rising slightly to 1.0005, had actually dipped below 99 cents to the dollar on Monday for the first time in 20 years. Christine Lagarde mentioning energy, the major source of inflation, but also food, yet they're seeing inflation spreading across a range of products, and they are continuing their interest rate increases at tricky time for Europe, as we'll dig into with a few of the developments that have been happening with their energy situation. But also, as I mentioned a few days ago, Bank of Canada did another interest rate hike, 75 basis points, planning on more. Their last interest rate hike was 1% a few months ago. Bank of Canada's core measure of inflation continued to rise, which prompted a greater risk that rising prices might become entrenched. So interesting to see that all of the major central banks, not just going at a quarter point hike, but doing some bigger sized interest rate increases. And we will see as the months go by how the economies respond to that. Certainly a tough environment with so much debt out there. But one thing to mention, obviously, in a couple of weeks, we have the Federal Reserve coming up with their meeting on September 21st. And looks like 86% chance priced in right now of a 75 basis point hike, which would be the third one over these past couple of months. And if that's the case, would bring the Fed fund target rate to 3% to 3.25%. We've seen slowdown in the mortgage market and stock market starting to drop as well again after a rally in June, but Fed still on pace for another 75 basis point hike. Now, in the midst of that, we had news a couple days ago that Russia finally acknowledging that the cutoff of gas supplies is directly related to the sanctions that have been placed. Russia claims punitive economic sanctions imposed on it by the West are responsible for the indefinite halt to gas supply via Europe's main pipeline. Here's a quote from Kremlin spokesman Dmitry Peskov. Of course, the very sanctions that prevent the maintenance of units, which prevent them from moving without appropriate which prevent these legal guarantees from being given, is precisely these sanctions that Western states have introduced that have brought the situation to what we see now. And the gas flows had been set to resume, but of course, things got a little murky over the weekend when G7 powers came up with a plan to implement a price cap on Russian oil, which seems a little bit tricky to do at this given time when there's already a shortage of energy, and now trying to place a price cap on Russian oil, which is one of those things that seems like it will be harder to implement effectively than actually talk about. Here's Zero Hedge mentioning, remains unclear how effective a price cap would be, since for the price cap to work, oil importers like India, China, and Turkey, which have significantly increased their purchases of Russian grades, would need to participate to access even cheaper oil. Although so far that doesn't seem like that is so likely to be the case. Here, Gazprom to shift gas sales to China to ruble and yuan from euros. So in the midst of all that's going on, they seem to be just further moving away from Western currencies. And as a result, we see more stress in these energy markets. Finland warning of a Lehman Brothers moment with power companies facing sudden cash shortages. as European energy trading is being strained by margin calls of at least 1.5 trillion. Yet, when you think about how all these things fit together, not an ideal situation, certainly, because as mentioned here, the underlying issue of gas market is a lack of supply. And if they're placing price caps, that's not going to add to reserves. Certainly, if you put a price cap, that would seemingly lead to less supply coming onto the market and leaving Europe in the situation where they're placing sanctions. Russia doesn't like it and is taking action against that. And the G7 and European nations following up with more potential sanctions. So, going to be interesting to see how that plays out in the winter. Not necessarily an easy solution in sight. So, just sending prayers to everyone involved. And hopefully, there is some sort of resolution of a positive nature, even if it does not seem like it's heading that way right now. But in the midst of this, we do have higher interest rates. And again, we'll see in a couple of weeks what the Federal Reserve does, but largely 75 basis points priced in. Real quick before we wrap up, did have some news out of Reyna Silver as they are moving forward on their Medicine Springs project. They've received the drilling permits and have begun mobilizing for a fully budgeted 4,000-meter phase 1 drilling program at Medicine Springs in Nevada. Testing they've done so far has indicated the presence of a carbonate replacement deposit, and the drilling program is designed to define key parameters of that. Quote here from Jorge Ramiro Monroy: Medicine Springs has revealed strong indications of being a high-grade district-scale CRD play. Medicine Springs has revealed strong indications of being a high-grade district-scale carbonate replacement deposit, and they're excited about being the first group to evaluate that. Now that they have their permits, they're quickly mobilizing for the first drill targets to define the project's framework and how much mineralization. Dr. Peter McGaugh has mentioned that they see 10 of the 13 major features they expect to see at the top of a large CRD system. They see that before drilling, so congratulations to Reyna as they move forward with that drilling program to find out more specifically what they have there. And with that said, we'll wrap up for now. But Dave Kranzler's gold and silver report coming your way in just about an hour and a half as he digs into the difference between the registered and eligible categories on the COMEX with a lot of metal flows there. So I think you'll find that one helpful. Hope you're having a great morning out there, and I'll see you in a little bit.